What's going on, guys? Nick here. We're going to do a top-down analysis, full chart breakdown on gold here. So we're going to get right into it, okay? First things first, we're here on the monthly. I'm just going to summarize basically what I'm doing. So right now I'm looking for areas of support and resistance. Let's find some key areas. 1350 is one. I actually am using the wrong tool. Horizontal ray. 1350 is my first level, right at the monthly. So basically what I'm going to do here is I'm just going to work my way down through the time frames, kind of follow what price action is doing, and look for areas where we could potentially enter on. Okay, so next is 1140, which looks like 1140. So again, I'm choosing this area based on the most reaction, like the amount of times prices reacted. I actually like 1150 better, because I can see here price action tested it once, tested it again here, tested it a couple times over here as well. So that is, I'm pretty happy with that. And we're looking at about, what is that, a 2,000 pip swing. So from 1350 we're looking to get to 1550. That's our next monthly. So once you get a good measurement of a range, you can just kind of, copy paste that same range throughout, because this is the most significant area where price action moves and then reacts, moves and then reacts. So as you can see here, this is a 2,000 pip range here to here, 2,000 pip range from here to here as well. And it actually lines up pretty well. You could see price action reacted multiple times. You could even kind of jump back and forth between the candlestick chart and the line chart just to make sure, double check. So it's looking good. Again, we want to get another range of 1750. And again, we don't have much testing price action as support because it hasn't broken through really. It's kind of just reached this area and then rejected. So we're going to leave it at that, right at 1750. I'll do one more up at 1950. So that if we do break this zone, we have another target. Okay. So this is the most recent price action. I'm going to do one more to the downside just because. And 1150 said leave us at 950. Okay. 950 being a monthly zone. Okay, cool. So now we want to find the weekly zones, which is I usually do from about halfway through. So this would be 850, right? So we'll make this the weekly. Because these are 2,000 pip ranges, half of that is very simple, 1,000 pips. Very, very simple. So next, we're looking for 1650. Just go ahead and mark these. So weekly there. And we can go ahead and take some of these levels off as we drop down. I don't like a chart that's too crowded, so I'll actually go ahead and delete some of the weeklies sometimes and just play the monthlies, because like you can see how many lines we're getting already here. So as we drop down time frames, we'll get an idea of what we need and what we don't need, and I'll explain that as we start deleting some and clearing up. And then finally 1050. Okay. Oops. Weekly. Okay, monthly, weekly. Okay, looking pretty good so far. I do want to bring this to your attention though right here. This looks like an inverse head and shoulders, an advanced one at that. So let's take a look at head and shoulders here. This would be the left shoulder, right? This would be the left shoulder over here. Neckline's up here on this monthly. Head is down here. Neckline again at the monthly. Right shoulder. And then boom, break at the neckline. So I'm going to leave that there. Huge inverse pattern, or inverse head and shoulder pattern. Giant break to the upside. Rule of thumb, target height of the pattern, just for the sake of it. We're looking at 300, what is that, 300 pips roughly, or 3,000 pips, I'm sorry, 3,000 pips. So break at the neckline, where are we at? 3,000, we have passed that and then some. So that 3,000 pip target would have been to this weekly, but again, you can see we broke through that recently. So let's drop down time frames, kind of see where we're at. We'll check the weekly real quick, just to see how things are looking. See if we can identify some sort of channel maybe. This is looking like a pretty big channel. So right now, basically what I'm doing is I'm just slowly progressing through the different time frames, so that I could give myself some time to recognize any patterns, make sure I don't miss anything, give myself a chance to recognize anything that I should be aware of. So we're just kind of going through it right now. There's no rush. There should be no pressure when analyzing a chart. We're literally just, we're taking our time going through it. We're just looking for areas, make sure everything makes sense. Yes, see, look, we found support at this weekly, we found rejection at this monthly. It broke through this monthly, found support there, came back down, tested this weekly. So this, we're just digesting the chart, digesting the analysis that we've done on the monthly, seeing if things make sense, and working our way through it at a comfortable pace. So here we are right now. Very steep channel. Okay, we don't even need these. No sense in cluttering the chart any further. Let's just see if we've formed structure. So what I want to do here, this was the conviction. This was the leg that broke the neckline. So I'm going to fib from the low to the high. Low to the high. It came back, hit the 38.2. See that? Good. That's confirmed structure. So now we can fib from a new low. I want to fib from this actually. This is the weekly. We can always go down and adjust it on a daily. But for right now, this is where we're at. So from low to the high, we're looking to form structure. So potentially down to this weekly, where the 38.2 is, big confluence area, or we could see a push higher. I think it's time to drop down time frames now. Okay. Here we are. Now we want to kind of square things up, make things look a little more clear. Let's bring this in. Okay. Let's expand this a little bit. All right, so these fibs now are daily fibs. That's from the low to the high up here. Okay. And so far, all we've seen is rejection here at this 23.6. I'm sorry. So this is where we're at. I'm going to draw the zone in, as it is a very significant zone of structure, right? Very, very significant zone. So we could also give us some time to identify other patterns in here, right? So this is looking like this was a massive triangle pattern. You guys can see this pretty clearly, right? Massive triangle pattern, symmetrical, and it continued higher, right? It pushed up, and then now it's forming this kind of like expanding, descending channel, it looks like. Let's just go ahead and mark this off. Okay. Look, again, I mean expanding because look, just look how the pattern's looking. Kind of expanding. Volume is increasing as this pattern is progressing, right? So that means we're going to get a very volatile move coming out of this pair, or coming out of gold, and out of this pattern very soon. As the volume picks up, we could easily see this pop to the upside, pop out of this monthly, something like this even. Could very well see this. Now again, the thing with gold is you have to keep in mind that it's a safe haven commodity, and it will generally appreciate over time, but it also lines up very well with our overall sentiment, which is bullish, okay? So we could definitely see something like this. Let's go ahead and highlight this. Then we're going to target higher towards the 1800 handle, which is a nice psychological handle, and then potentially even higher. But for right now, we're going to target here the negative 27 fib level on this fib here, on this daily fib. I'm going to go ahead and make this green for our TP. That's our target, right? So we easily want to see something like this. So this is a bit of a range, actually. So right now we have some confluence at the 0%. We have an established high here, wick to the high, and then here as well, wicks to the high, wicks to the high. This is an established area. So we can go ahead and clean the chart up. We've seen these patterns. This symmetrical triangle has already played out. We don't need it there anymore. We know this is expanding. This is pulled back through the MAs and then gave us a strong bullish variation. And it looks like price action is headed back towards this monthly. So we're pretty cleaned up now. Price action's looking good. We have our fibs on. We have our monthly, weekly level set up. So what we're going to do now is drop time frames and kind of get a better idea of what's going on. What this consolidation's doing. Are we going to see a major play to the upside? I do want to bring these fibs in, actually. Zoom out a second. Where is it? Where are these fibs? They're kind of stuck. Give me 1 second here. Yeah, they're a bit stuck. Hold on 1 second. It's kind of hidden behind this chart right here. There it is. Okay, let's bring this in. Bring this back down. Okay. Now we can zoom in so we can still see the fibs. That's what I wanted to do. Zoom in so we can still see the fibs. Okay. Let's expand it a little more. get a better idea of what this consolidation is doing. So it was basically right there. I actually want to redraw this. Sometimes your fibs get messed up, you know? So you want to go, don't be afraid to jump back up to the higher time frames once you've already dropped down. Reset them. So up to the high. And make sure the low is good. You want to reset this low. Because again, it's all about precision, guys. It's all about precision. Okay, so we seem pretty good now. Let's drop down to the 4 hour once more. Let's redraw these lines. Right, see, you also can't be afraid of reanalyzing an entire chart. Like, sometimes you just got to reset it, refresh it. That's why we're doing in this series. We're doing a full top-down analysis because I'm just taking you guys through the entire process. No pressure whatsoever. So, okay, we're at a key level now. I do want to identify a nice 4 hour level because, again, I just want to see what potential obstacles could be preventing us from going higher sooner than later. So I want to mark this off right at, it's looking like 1725. I'm sorry, 1725. Nice psychological level. And let's see if it makes sense. Jump back to the candlestick chart. Tested, came back, tested again, broke through, tested, broke through. Area was tested and so on. Excuse me, that's looking pretty good. I actually want to see if this can go lower. Yeah, I do like this area better. 1720. So you can't be afraid to move things either. Just this area made a little more sense to me. More touches happened here, right? Even the fact that this is an overlap, it doesn't matter. I touched more times at this level, and what we're seeing right now is a good sign. A break, a giant bullish engulfing, great sign. So for the short term, this is going to be our setup. So we know we're long based on price action, based on overall sentiment and price action. We know we're long, right? Major support level right here. This blue zone, and this is a major resistance level up near our monthly. So what do we need to see happen? To play in this range, we could just see a pullback and then a continuation higher towards the top of the range, right? This is very likely, and it's looking like it could be about 300 pips higher. Right, about 300 pips higher from this current level. Actually, it's a little more than that. Hold on. Yeah. Okay. So about 300 to the monthly. And then we want to see this. We want to see a nice break and retest. Okay. So you want to see a push higher, followed by a higher low with strong bullish setups, and then we could target towards this next area, this negative 27 fib level, around 1835, right where this weekly level is. Huge confluence. So again, guys, this is 70 pips. This could potentially be from the monthly to the weekly, looking at about 1,000 pips. That's pretty big. I'm sorry, 100 pips. That's a big move. 5% of the entire chart here. That's absolutely crazy. So this could be a really good trade, guys. We're kind of just waiting on this to play out, and we'll see. So this is what we need to see for the bullish trend to continue on the higher time frame. So we want to see a nice break of this resistance, this monthly resistance, confirmed higher low, continuation higher. So this is looking pretty likely. Again, so in order to enter on this, you would need to drop to the 1 hour, look for confirmations. And this would be your execution time frame. So now we've made it all the way down to the 1 hour, potentially the 30-minute. This is where you'll be looking for entries. So you're looking for that pullback, followed by those large bullish engulfings to push price action higher. And same with once we broke this monthly. So once we break the monthly, you could then drop to a 1 hour, 30-minute, and look for those pullbacks to then get in. Okay, so let's just zoom out, see if this all makes sense. Based on the overall time frame, we're very bullish, as we can see. I want to put some price range in here. So we're looking for that final move, that continuation from the monthly to the weekly. Okay? So that's basically what we're looking at. Very bullish. So this is all good so far. We know we pretty much dissected the whole chart. We broke it down into these major levels. Kind of zoned in on price action. Identified that we're kind of chilling at a high, but ranging, which is good. Gold's picking up momentum, not really affected by some of the other market factors going on in other currency pairs, especially with US dollar. It is reacting slightly, but it's holding its own. We saw that it rejected swiftly from this 23.6 area, giving us a large bullish engulfing, bullish variation, And it's looking like it's going to continue. This is some good volume that we really need to see. So we'll be looking to make entries on this pretty soon if we just see those confirmations. So right now I'm just hanging out on the 4 hour. I want to see this confirmation. I want to see this candle close in the next 2.5 hours, and then either start looking for pullbacks or look for momentum to push it through this monthly, in which case we'll get in on a pullback there as well. Okay, guys, so that has been a full chart breakdown on gold. Hope you guys enjoyed it, and I'll see you in the next one.